Hello everyone, this is Mubashir. Welcome to another video of daily market analysis. In this video, I will share my technical analysis and levels based on which you can make informed trading decisions. So join me as we navigate the current market conditions. So first, let's have a look at what I mentioned in yesterday's video. Now we are in a place where we are in the support zone. So taking bearish trades in the support zone won't be so good. My support zone is still 21,715. So I'm not expecting a breakdown below this. We can see some kind of pullback again within the next 2 days, because this was a zone from where we had seen the breakout earlier, from this cup and handle, and even this, we can call this as a pole and flag. We had seen this breakout. So this was a breakout zone. This is where the demand was created, and this is my support zone or the demand zone. So I'm expecting some support to build up over here. Uh, so continuing today, let's see what happened actually. We had a slight gap up open above our support zone, and then a sharp pullback into this zone, sharp crash into the zone, and it reached our support zone. This is the zone which I had mentioned earlier, where our trend had started. Our breakout of the cup and handle and this flag consolidation had started from this zone. So this area where it had prior resistance, this resistance here, it had broken out. So this area from 750, I had mentioned 750 and lower would act as a good support. And that is precisely what happened today. After it reached 750, there was a pause, a sharp candle inside, and a sharp rejection. These two candles combined would indicate an open around here, a lower wick till down here, and a final close up. So combine these two candles, and we can look at it as a hammer pattern. Let's see how it is here. You can see open here. It goes down and finally manages to close up here with a small upper wick. So it's a hammer kind of pattern in the support zone, exactly as we had mentioned. So just looking at this hammer pattern, also we could have gone long, or and with a stop loss below the lows over here, or we could have waited for a confirmation that yes, it is indeed holding our support zone. So once we got a close above our our support zone, we could have gone long with a stop loss around the low of this breakout candle, as it is strong, or we could have kept at a prior small swing low, which is the low of this candle around 760. So keeping a stop loss around 760 or low of this candle around 780, we could have held our bullish trades, either a bull put spread, or a naked put sell position. And let's see how it worked out after that. Yesterday I had mentioned that after the first entry to this zone, there was a bounce. It re-entered again, which didn't show strength in the bounce, and then it bounced back again, made a lower high, again indicating that possibility of moving lower. And today it tried to break the highs of these, but it never could sustain. We could never get a close above this. The three candles it tried, it failed to get strength, and then it had to go lower to gain more demand before moving higher and breaking the high of day. But after breaking the high of day, again there was profit booking from this zone, this prior supported zone from the Friday and Monday. So it faced resistance over there, and it again had a pullback to our zone. So currently this is the first time we are actually seeing some sign of a reversal in the bearish trend. So since we touched here, I have been saying we are bearish. Even after the Thursday pullback, I said we are still in bearish trend. And Friday I mentioned that this is a doji. There is indecision, but since this trend is in the starting stage, this doji does not indicate a trend reversal, but it's a possibility a sign of trend continuation. Monday we had a further pullback, deeper pullback, and I still said that this could be a chance for a good consolidation in this zone, and we might see continuation to the lower side. Tuesday, finally, we had the gap down open and it tested our zone. Wednesday, finally, we reached our zone from where we had begun our journey, 750 to 700. So this zone might be a chance of reversal. We could have taken reversal trades from here, and we could still be holding these reversal trades. And by that I mean our bearish bear call spread positions can still be held. Right now, this is just a first sign of reversal, and my levels remain the same. Yesterday, the levels which I had mentioned is the highs of this zone, 22, 124, and you can see how perfectly these zones are working. It reached the high of this zone around 125 and it stopped, and here it reached the low of this zone and it stopped, and it's making a perfect reversal without closing outside the range. So this is why we can, use these zones for making our informed trading decisions, as I had mentioned. That's why I'm sharing these levels based on which we can make the decisions in your trading and have a bias or a view. Right now, yesterday I mentioned there is a chance of reversal or accumulation, consolidation over here before a reversal, because this is the third support zone. It's Nifty has been visiting 1, 2, and finally the third zone. So there might it might stall despite the fact that 1, 2, 3, almost 4 bottom has finally broken, and a lot of people have turned bearish. But my technical analysis is different. This is where we have started the move, and this is where the demand is. So the bulls are likely to support this position, and that's what they have done so far. So this is the first sign of reversal. So right now my view is uh, kind of sideways. So we can, the bias is still bearish. Though the bias is still bearish, we can hold both put sell and call sell positions. We can hold both long and short positions currently. And the stop loss for the long side, for the short side, would be a close above this candle 22 125. From there we can change our bias to bullish finally. Let's look at the February retracement. This should have changed by now. Yes, this is indicating 0.68 around 22,015. So a close above this itself should indicate some bullishness. But since it's in our resistance zone, we will respect our zone more than the fib retracement. So we need a close above 22 125. It will make a new high, and then we can consider that we have changed to bullish. Right now, from our bearish, the trend is still bearish. We have a low, a lower high, and a lower low, and this is still a lower high. So once we have claimed this and ideally this point, that's when it becomes purely bullish. But for support resistance point of view, a claim about this 22 125 itself is a bullish indication for me. And here we have actually seen a small sign of reversal. Though this candle intraday, it's like it made a lower wick, a upper wick, and it closed almost where it opened. It has a small body. It is similar to a doji, but this doji I had mentioned, it was a sign of, it might be a sign of continuation. But this doji, on the other hand, however, can be a sign of reversal. This is how you have to understand the market structure. This comes from, spending too much time with the charts and observing how the market behaves, the trend and the structures. So currently, this is the 22 125 is the one level to watch. And on the downside, have you taken these bullish positions? The low of this candle is obviously a stop loss, and it's coinciding with the low of my zone. Other than that, we have this 22 or 21 760. This level can be considered, reaching of this level tomorrow can be considered as a bearish uh, trigger. So 21,760, and ideally a close below 21,715. So the levels remain the same, but the bias currently, the trend also is the same. The trend is still negative, but my bias has changed from, as for example, this day, the trend was still bullish, but my bias had changed from bullish to sideways volatile. Here I'm not indicating, I don't think that I'm not expecting volatility. However, I'm expecting it to remain sideways tomorrow between 22 125 and 22 21 715. So keeping these levels in mind, you know, place your trades with stop loss and respect your stop loss. These analysis are to help you, know the direction, what is probable, not always what will happen, but what is more likely to happen. Keeping that in mind, you can plan your trades, your entries, your position sizing, your risk management. And once your plan, your trade fails, you should accept your stop loss and limit your loss. No matter what, no matter who it is, whether it's a big institution, the only way people know to keep their losses small is by cutting their losses. So you should, once your stop loss has hit and once your idea has failed, you have to accept your loss. For example, here, had you gone short at the break of previous day low for some reason in this support zone, the break of the high of day you should have booked your loss. You would have been profit for a few candles, but eventually over here there was no reason to hold your short position any longer. If you're holding and hoping, this can continue, very well be a continuation of reversal and continue going higher. So never fight the trend, even whether it's a small trend or a long trend, bigger time frame trend. Don't fight the trend, and stay with the trend, know your levels and trade accordingly. Make your judgment. When you're cutting your losses, you need to be very ruthless. You cannot marry your trade and stick with it. It can be very painful. So before it gets painful, we should and do our analysis and know our levels, where we have to be very strict in our judgment, our entries and our exits as well. So knowing this, as always, trade responsibly. Okay, this might make the video a little longer, but I have to introduce this concept as well, that since this high to this low, people are afraid of drawing trend lines, but this regression trend line is very easy method of drawing our trend line. Just use that from our pivot high to low. You get a trend line over here, as you can see how it beautifully respected this zone. We saw a breakout and now it's resisting from this very zone. So we have one trend line here, and as always, I don't look at support and resistance as purely one level. I look at them as a zone. So here perfectly we have a zone. We have this breakout into this zone and a rejection. So we can look for a breakout above this trend line, how it is reacting in this zone, whether it remains and it gets rejected, or whether it remains in this zone and we have a close above this zone. So we can view the trend line breakout as another initiation of a reversal entry. But remember, we have this resistance zone very close nearby, and ideally, with the resistance so nearby, which was formed strong recently, I wouldn't recommend. But this can be used as a sign to check our strength. If we have further reversal strength, we might see a close above this upper trend line. So keep this in mind as well. So we can see tomorrow how these levels pan out as well. Okay, and then also as always, trade responsibly with stop loss.